This week, the tech world was buzzing. Oracle and Nebius both saw their stocks absolutely skyrocket on the back of massive AI deals. It's clear that the AI boom isn't just about Nvidia and Palantir anymore. It's about the infrastructure that powers them. So the question is, who's next? In this video, we're going to delve into two other critical players, Marvell and Broadcom, to determine if either is one we want to own. But first, let's talk about the unsung hero of the AI revolution and the one uncovered segment we believe is about to explode. The segment we are most excited about is their involvement in AI networking plus interconnects. This is the critical infrastructure that connects thousands of AI accelerators like GPUs or XPUs together into powerful clusters. To understand the criticality of AI networking and interconnects, it is essential to really understand its role in an AI data center workload. If Nvidia's GPUs are the brain, as these chips are what perform all the data processing and calculation, the network switches plus interconnects are the nerve plus spinal cord that provide a pathway for signals to communicate with one another. To train a massive AI model, like a large language model, the workload is too big for a single GPU. It must be broken up and distributed across thousands of GPUs, which constantly need to send data and talk to each other at incredibly high speeds to ensure that they are in sync. This is what networking and interconnects enable, a pathway to move data from server to server without any data loss or latency. There are numbers too that back up this expected surge in networking. According to Grandview Research, the total addressable market is expected to grow from $43 billion today to $155 billion in 2033, an incredible 17% market growth CAGR in the next 9 years. It's a segment of data center buildouts that have not been covered as much as the shortage of energy or an open AI contracted capacity deal, and we believe that this can produce the next asymmetric surge in AI revenue. There are really three companies that lead this segment. First is Broadcom. Broadcom is a stock that most of us know as it is a $1.7 trillion market cap company with a stock up nearly 900% in the past 5 years. They've made some brilliant acquisitions throughout CEO Hock Tan's leadership and now are involved in three segments with secular tailwinds: cybersecurity, infrastructure software, and as a merchant silicon business for AI chips. Today, their semiconductor solutions segment makes about 60% of their revenue. In particular, they sell the Tomahawk switch, which is a chip that they sell to companies like Arista Networks and Cisco to build full networking switches. It is considered the gold standard, with estimates of about 90% of the high-end network switch market share. Thus, much of the networking growth will likely mean greater business for these Tomahawk chips. Broadcom stock is up nearly 20% since their earnings update on September 4th, and it's mostly tied to Broadcom's announcement on their custom AI accelerators. Already having Google as a customer, the market seemed excited that Broadcom announced a $10 billion in new orders from a fourth customer believed to be OpenAI. Now, if Broadcom is the highway system, our next company is the ramps, bridges, and tunnels. Both Broadcom switches and Marvell's interconnects are needed for AI data center buildouts. Marvell's stock has not nearly had the success of Broadcom's these last 5 years. They are about a $60 billion market cap, 1/30th the size of Broadcom, with a stock that has increased about 70% these past 5 years. Historically, Marvell got most of its revenue as a Wi-Fi and Bluetooth supplier for smartphones, as well as a chip supplier for solid-state drives for enterprise storage solutions. However, today Marvell has gone all in on data center exposure with 75% of its revenue now in the data center segments. In particular, they are the leader in interconnects by pioneering the technologies essential for high-speed data transmission over optical fiber and silicon photonics. As a technology leader, this will bode them well. But similar to Broadcom, Marvell is also working with hyperscalers directly to develop custom XPU chips, in particular with Amazon and Microsoft. Again, XPUs will not replace Nvidia's GPUs, but rather just complement GPUs, as XPUs are a chip designed to be optimized for a specific function. Marvell is expecting this segment to be their highest earning segment by 2028. Now, as you can see from this chart, Marvell is guiding that their leadership in interconnects will grow from $4 billion in revenue in 2023 to a $19 billion revenue by 2028, an impressive 35% CAGR. However, this pales in comparison with their expected 53% CAGR in XPUs from $6 billion to $55 billion. Thus, both Broadcom and Marvell are signaling impressive growth ahead, driven by their leadership in network switches or interconnects, and also their involvement in customer-specific use case XPUs. It's impossible to discuss this market without also mentioning the third company in this space, Nvidia. Now, the reason to buy Nvidia stock is not because of their involvement in network and switches plus interconnects. No. Nvidia's thesis is really about continued innovation and application of its GPU technologies. However, I would be remiss to not mention that Nvidia's acquisition of Mellanox in 2020 for $7 billion has allowed them to be a full-service data center infrastructure player. Marvell and Broadcom are the leaders in this segment, with companies wanting to avoid giving Nvidia the keys to be the single supplier for all their data center infrastructure. Plus, also, Broadcom and in Marvell's decades of experience in networking and interconnects give them a technology plus cost effectiveness moat. However, for smaller AI startups, these startups may want to go with Nvidia's plug-and-play solution that is easier to deploy and manage. Let's now discuss which company we favor more in this network and interconnect niche through mine and my dad's framework to determine if we will add to our portfolio. Now, before we do, please make sure to read the disclaimer in the notes below. We are not financial advisors, nor anything we say should be taken as financial advice or a formal recommendation. Also, if you enjoy videos like this, please help us out and click subscribe as we aim to cover the world's most innovative and long-term focused companies. Now, let's go through Broadcom and Marvell through my 5-step framework. From a leadership perspective, I am actually going to be giving the edge to Marvell's CEO, Matt Murphy. This may be controversial since Broadcom CEO, Hock Tan, has delivered 26,000% returns since he started in 2006 and made many acquisitions at the time were questionable but were applauded years later. The negative on him, though, is his ruthless short-term focus to acquire a company, gut the employee headcount, and minimize R&D on long-term initiatives. Thus, even though it hasn't come back to hit Broadcom stock at all, it's just very, very bad employee morale. Marvell, on the other hand, is highly loved by employees and customers, and their CEO also has been a strategic visionary as well that has pushed Marvell to be at the center of the AI plus 5G boom today. From a valuation perspective, I'm giving the edge to Marvell as well. Both companies are in growth phase, even though Broadcom pays a growing dividend. So a PEG ratio is how I would be judging the stronger between Marvell and Broadcom. For Marvell, I will use their non-GAAP PE as their net income is understated due to non-tangible assets that are still being amortized from their acquisitions a few years ago. Their PEG ratio is around 0.8. Broadcom also has a nice PEG ratio of around 1.9, which growth is still there, but with Broadcom being such a large company, the growth rate is just a little bit lower. From a 5-year revenue and profit growth, both companies will be benefiting from this tailwind and the growth and the build-out of AI data centers. But the edge will go to Broadcom as they have a best-in-class profit margins and cash flow. From a total addressable market, edge also goes to Broadcom as they're more diversified in high-growth areas. Marvell's focus is on the fastest-growing part of the semiconductor industry. Broadcom also is involved in this, but they're also involved in cybersecurity with Symantec plus infrastructure software with their acquisition of VMware. Also, for secular tailwinds, advantage also goes to Broadcom, as they benefit from 3 tailwinds: AI data centers, infrastructure software, and cybersecurity, compared to just AI data centers for Marvell. Overall, though, even though Broadcom captured the stronger score on 3 of the 5 points due to their more diverse business model and larger size, I do prefer Marvell as a stock to add to our portfolio at today's price. Their forward PEG ratio of 0.8 signals growth at a reasonable price, coupled with their potential to grow with securing new customers and XPUs and their leadership in interconnect technologies gives me very high confidence in Marvell. What are your thoughts, Dad, as you run it through your framework?
Thank you, Scott, for that excellent evaluation you did. So, okay, I would like to go over the company fundamentals first, and I'll do it in the order. I'll start with Broadcom, and then I'll go to Marvell after that. So for Broadcom, the dividend is 0.6%, the beta is 1.16, and the market cap is 1.7 trillion, and the earnings comes out around December 11, and I gave that a positive. For Marvell, the dividend is around 0.4, the beta is 1.85, market cap is 57 billion, and the earnings comes out December 2nd, and I gave that a neutral. So for company fundamentals, it goes to Broadcom. For number two, the beats, they both beat 4 out of the last 4 earnings. So they both get positives. Thus, that's a tie. So we leave it in the middle. For number 3, the company financials, the profit margin for Broadcom is around 60%. Debt to equity is around 100%. PEG ratio is 1.9. So I give that a neutral to positive. And for Marvell, the profit margin's around 14%. Debt to equity is 30%, and the PEG ratio is 0.8. They both get a neutral to positive, so that's another tie. Going to the stock technicals for Broadcom, the moving average, the 50 days above the 200-day moving average, and the 200-day is sloping positive, and the price is above both the 50-day and 200-day. And for Marvell, the moving average is below the 200, 50 days below the 200, 200 is sloping negative, and the price is below both the 50-day and 200-day. And for the Bollinger Bands, for Broadcom, it's above the upper band. So that's, as I mentioned previously, the Bollinger Band basically has 2 standard deviations, which means the price stays within the upper band and lower band 95% of the time. Right now, Broadcom, the price is above the upper band. So I feel that in my opinion, I'm going to wait for it to go back to the middle band, which is the 20-day moving average, which is in the upper 310s. Now for Marvell, the price is between the lower band and middle band. So Broadcom gets a neutral to positive, and Marvell gets a negative. For this one, the pick goes to Broadcom. Now, for the last pick, analyst coverage. For Broadcom, for the analysts I follow, there's 4 holds, 12 buys, and the institutional percentage of institutions holding the stock is 76%. So I gave that a neutral to positive. And for Marvell, there's 1 strong sell, 1 hold, 9 buys, and 1 strong buy. And the institutional percentage is 82%. So that's also neutral to positive, so that's a tie. So Scott, my opinion is that we can buy Broadcom, but it has to be in the 310s. So let's say a 10 to 15% price cut. And for Marvell, I would say as a special play, I really feel it has so much potential because, as you said, they're the off-ramp for the nervous system of the data centers. So I would maybe do a quarter to a third position of Marvell right now. I would take that chance. That's my take, Scott. So I hand it back to you.
Overall, this network and interconnect segment for AI data center buildouts is one that we like, so we will allocate position in our community portfolio for it. At today's price, we will add Marvell at a 25% position. Broadcom is the bigger, more stable play, but we will wait until $310 to start our position. Thank you for watching our video. Please help us out and click subscribe if you like weekly content about innovative, long-term focused companies. Until next time, wishing you much success in your investing journey.